Welcome to Crypto Wave News. Today we'll analyze the forecast for Bitcoin prices in the upcoming month together. Before we begin our video, don't forget to subscribe to our channel to stay updated on the latest developments in the crypto world. Since its inception in 2009, Bitcoin, BTC, has consistently captured the attention of tech enthusiasts and investors, garnering widespread headlines. Experiencing numerous remarkable surges, the cryptocurrency surged from under $500 in 2013 to surpassing $64,000 by 2021. Following a significant downturn from these peaks, Bitcoin dipped below $17,000 in 2022. Nonetheless, it has since staged a recovery, surpassing $50,000 on February 12th. This resurgence has sparked speculation among many investors about the potential for Bitcoin to surpass its previous record highs and reach six figures. When will Bitcoin hit $100,000? The future trajectory of Bitcoin's value remains uncertain, with fluctuations likely over the upcoming days, weeks, months, or even years. However, one method of projecting potential price changes involves analyzing BTC's past performance. In January 2014, Bitcoin was valued at around $800. By January 2024, its value had soared to over $42,000, marking a staggering price increase of more than 5,150% and an annualized return exceeding 135% per year over the past decade. If Bitcoin maintains a similar rate of appreciation in its average annual returns, it could reach $98,700 by January 2025 and hit $100,000 in February of that same year. Some experts anticipate even swifter value growth for Bitcoin. Frank Holmes, executive chairman of data center builder and operator Hive Digital Technologies, suggests that its price could potentially double or even quadruple over the next 12 months. Similarly, Matt Hougan, chief investment officer at Bitwise, believes that Bitcoin could experience significant price surges this year, indicating confidence in its multi-year bull market and the likelihood of establishing new all-time highs. However, it's important to recognize that this projection simplifies Bitcoin's potential price movements. Cryptocurrency markets are highly volatile, and despite the impressive decade of 135% annualized returns, there have been numerous instances where Bitcoin experienced substantial value losses, sometimes taking months or even years to recover to previous highs. Why might the price of Bitcoin rise? Several developments could contribute to a rise in Bitcoin's value. Spot. Bitcoin ETFs. On January 10th, the U.S. Securities and Exchange Commission sanctioned the inaugural spot Bitcoin ETFs. This approval empowers providers to establish ETFs, directly acquiring and retaining Bitcoin on behalf of investors. Consequently, investors can engage in BTC trading at its current or spot price, eliminating the previous restriction to trading Bitcoin futures contracts, a complicated derivative suitable mainly for seasoned investors. Many investors perceive the approval of spot ETFs as a means to enhance Bitcoin's accessibility as an investment, potentially attracting individuals who previously refrained from Bitcoin ownership due to the intricacies of cryptocurrency acquisition. Bitcoin's price is dictated by supply and demand. With the advent of Bitcoin ETFs, we are witnessing a significant surge in demand, remarks Hougan. The Bitcoin halving. Additionally, there is another factor impacting BTC's supply: upcoming halving events. Bitcoin operates through a decentralized network of computers tasked with validating transactions, a process commonly referred to as mining. Upon successfully validating a block of transactions by solving the correct cryptographic puzzle, the miner responsible receives a reward in the form of newly generated Bitcoin. With a maximum cap of 21 million Bitcoins set to ever be produced, the reward for validating a block undergoes periodic halving. The timing of these halving events is not fixed, but rather contingent upon the number of blocks validated. Estimates suggest the next halving may occur around May 2024. Halving serves to decrease the influx of new Bitcoin into circulation, historically leading to heightened trade volume and increased demand for Bitcoin. In April, we anticipate a reduction of approximately $7 billion per year in new supply entering the market. This reduction in new supply, coupled with emerging sources of demand, sets up a promising scenario, notes Hugan. Layer 2. Solutions represent another significant factor influencing Bitcoin's current price dynamics. These solutions have bolstered the scalability and utility of the Bitcoin network. While previously limited to mining and transferring Bitcoins between wallets, the Bitcoin network now supports additional functionalities, including smart contracts and decentralized applications. This expanded functionality enhances the overall value proposition of the Bitcoin network. Could Bitcoin crash again? Bitcoin is renowned for its pronounced volatility. In its nascent stages, Bitcoin was valued at mere pennies, remaining worth only a few dollars for several years thereafter. Nonetheless, the cryptocurrency has since experienced significant price fluctuations. For instance, it plummeted from a peak of $60,000 in April 2021 to below $30,000 by July of the same year. Subsequently, Bitcoin surged to a new all-time high of $65,000 in November, only to dip to around $16,000 by the end of 2022. Howard Hook, a CFP and CPA affiliated with EKS Associates based in Princeton, New Jersey, points out several potential triggers for a Bitcoin crash. He highlights regulatory concerns as one of the foremost risks, alongside the possibility of another cryptocurrency usurping Bitcoin's dominance. The unpredictable nature of assets lacking tangible backing means they can swiftly lose value if a significant number of investors opt to sell, Hook emphasizes. Holmes underscores the role of government policies as a harbinger of change, citing anti-crypto legislation as a substantial risk to Bitcoin's price. Should you invest in Bitcoin? Considering its historical returns, Bitcoin may present an enticing investment opportunity. Recent developments, such as the introduction and trading of spot Bitcoin ETFs, have made it easier than ever for investors to include cryptocurrency in their portfolios. For some investors, the potential for diversification and returns outweighs the associated risks. Bitcoin, akin to gold, holds appeal for investors seeking to diversify their portfolio assets, remarks Holmes. He cites a Bloomberg study from last summer in which over 600 investors were asked to rank preferred assets in the event of a U.S. debt ceiling breach and default. Bitcoin ranked third on the list following gold and treasuries. However, it's crucial to acknowledge the significant risks inherent in cryptocurrencies. Despite Bitcoin's existence for over 15 years, it remains a relatively youthful asset class. Consequently, predicting its longevity and future value poses challenges. Howard Hook advises everyday investors to exercise caution, emphasizing the speculative nature of Bitcoin. While it serves as a digital currency, much, if not all, of Bitcoin's value is derived from speculation, Hook warns. In contrast, Matt Hougan views crypto as a promising opportunity, emphasizing the inseparable link between risk and reward. In Bitcoin, there is typically a plentiful supply of both, Hougan asserts.